Okay, so I was talking about market structure, and personally, market structure is just simple, and I don't like using much of theory explaining something, because all of the concept in trading is practical. So market structure, for example, let us pick this one, this volatility 75. So for you to know the market structure, you need to understand the highs and the lows. So the highs and the lows in the market are identified just in a simple way. So how will you identify this is a high and this is a low? For example, this market was selling market. It was a selling market from this point up to this point. Let me just use 5 minutes time frame for the sake of I've just picked this time frame. So the market is selling from this point up to this point. So what are we expecting? We're expecting the market to close. If it's a selling market, let us just pick this one. It is a selling market. So we are expecting this market to respect this previous high. This market should come and respect this high. So how can we go about it? It must close above this high, and it should not close below this low. So that is the market structure. Like, it must respect in between the market structure. So after knowing that, what are you doing next? Then, so it came next to this high, and it never broke below this low. Then so let us pick the previous. Let us use the other one. So it went high, low, high. Then we are expecting this market not to close below this point. I think you're getting. This market should not close below this point. So what can we do? Let us draw something like a line here. So this market should not close below this point. So how can we go about it? This market should respect this low, and it must close above this high. So as the market, that it can be like we can say that it is obeying that structure. So the moment the market will close below this structure, as you can see, this market closed below this structure. So what can we do as traders? If it closes below this structure, we are changing our direction from buying this market to selling this market. I think you're getting our point. So the other, if I'm going to make a video on demand and supply. So if this market closes up below this point, so we will leave all these other things. Like, to touch are easy, we leave these things. So what can we do? We will focus on this point now. If this market sells, we are expecting this market, if it retests, but the market moves with a pullback and retest, like it is ups and downs like that. So if this, now we are focusing at this point because it has closed below this point. So what are we doing? We are waiting this market to come and retest at this point. If this market comes and respects this point, if it comes and respects this point, upper, like it reaches here, then respects. Now that you can term this market as a selling market or a bearish market. So in trading, a selling market we term is a bearish market, and a buying market will term is as a bullish market. So what can we do this market? We are waiting for sales, but you need to analyze from the higher time frame so that it can give you a clear picture on how the trading or the marketing entails. So a good example is, for example, the other time I told you about demand and supply. I think you can recall about that. So if it sells from here and it comes back and respects this point, I think you're seeing what I'm doing, and it respects this point. It respects this point, like it comes up to this point and it respects that. By respecting, I mean it should not close above this point. It should not close above this point. So what can we do? We will now focus on selling this market significant, like we will be selling this market massively. We will be selling this market massively by the use of the higher time frame. Like I do say, I've known you maybe, for example, in 1 week time. Now, if someone comes today and I have you and that maybe a friend X comes at the moment, and you two borrows me some money, like you want to borrow me some money. So whom should I consider? I'll consider you because I've known you for like 2, 3, 4, 5, 6 days, rather than the person who will just come today to borrow me some money, because I know you. So I can't rate this market from 30 minutes time frame going to 1 minute. How will I rate this market? I rate this market from 1 hour coming to monthly, because from 1 hour to monthly, I think there is a what you can know how was the market behaving. I think you're getting, like, you're understanding what I'm trying to tell you. Yeah, so that's all about market structure. If market, that's the only thing that I can tell you that is all about market structure. Leave along those things that unaambiwa, like they tell you that theory, look, those theory. I don't like theory. Let us just call a spade a spade. Market structure, break of structure, change of character. It happens when the market violates the previous high twice, or the market violates the previous low twice. Like for example here, if this market violates this point, like it has closed below this point. Are you seeing this point? This point. It has closed below this point. It has sold up to this point. So what are we doing? We are waiting the market to pull back up to this point. Then if it pulls back to this point, then what can we do? We will be focusing on selling this market massively. So that's how trading is done. That's all about market structure. Now, this market structure, most people take like even 3 months understanding market structure. And for me, I've been in this sector for a long time. So I know the backbone or the concept in trading. And that's how I can tell you all about market structure. So just listen on what I'm doing, then you'll understand the general market structure. I think that's what I have for now. And subscribe to my video, like my concept. See you guys in the next video, guys. Thank you. Okay.